Today, I want to talk about how another AMC short seller is about to collapse. I also want to touch on how institutional ownership for both AMC and GameStop is at an all-time high. It seems they're preparing for something big. So stay tuned and let's make some money. So let's dive straight in with the key information. We can see from this article that Goldman Sachs is dumping their Millennium stake amid the SEBI crackdown. So if you didn't know, Millennium Management are a hedge fund that in the past has been shorting AMC. If you didn't know, they were the ones responsible for the massive FTDs, the 25 million FTDs in a single day on APE. And this article says in a frenzied move that reeks of panic, Goldman Sachs is scrambling to offload a 10 to 15% stake in Millennium Management. It says valued at a lofty $14 billion stake, with a minimum buy-in of $1 million and a cap of $20 million per investor. This fire sale, orchestrated through Goldman's Peters Hill partners, comes hot on the heels of SEBI's brutal takedown of Jane Street Group in July 2025. SEBI recently seized over $550 million in unlawful gains from Jane Street, and now the exact same investigation is being made of Millennium Management. And super interestingly, it says that Goldman's rush to sell screams one thing: the fear that Millennium's alleged dirty laundry is tied to the Jane Street saga, and that it could unravel a broader exodus of big investors from hedge funds and quantitative giants in the months ahead. So this is yet another hedge fund that a big bank is desperately trying to escape from before their collapse. The last time we saw this was Credit Suisse trying to desperately escape from Archegos, which it failed to do so, and it took on billions of dollars in losses in the process. And as you can see from this screenshot, AI has proved, or AI has suggested, that the losses Credit Suisse took on from Archegos, both the direct losses and also the losses from taking over their toxic swaps, directly led to Credit Suisse's collapse. It will be very interesting to see if Goldman Sachs can dump their stake in Millennium Management, and if they do or if they don't, how much of a loss Goldman Sachs takes. Are they going to suffer billions of dollars in losses? Are they going to be saddled with some kind of toxic swap agreement? And could Goldman Sachs collapse as well? I think a Goldman Sachs collapse would be absolutely huge, but right now that's a very grey scenario. But what we do know is that Millennium Management is struggling bad. What is interesting though is how two different mainstream media outlets reporting on the same story have very different headlines, as Kristen has pointed out. So this article that I showed you about Goldman Sachs dumping their Millennium Management stake is written by an Indian reporting website, whereas on the flip side, Bloomberg is trying to make this sound like an absolute gift for investors. The Bloomberg article says that Goldman Sachs is dangling a Millennium hedge fund stake for just $1 million. What a slice of an absolute opportunity. Even the first line, it says for just $1 million, investors are being offered a slice of one of the world's largest hedge funds, trying to make it sound like a gift for investors. Of course, we know why Bloomberg is trying to make this liquidation sound like a gift, and it's because Bloomberg is owned by these very same hedge funds and banks. If you didn't know, Bloomberg is 88% owned by Michael Bloomberg himself, and the other 12% owned, of course, by Bank of America. And for Michael Bloomberg, of course, he runs the Bloomberg News reporting website, but also sells the Bloomberg terminal. And guess who his #1 customers are for the Bloomberg terminal? Every hedge fund and institution on Wall Street. It's super interesting to see how different mainstream media reporters can twist an article to sound so much better than it actually is. And it's also super interesting to understand exactly why these mainstream media reporters are twisting the headline when you understand the ownership of the reporting institution. But as I said, let's talk about both AMC and GameStop and their institutional ownership. So this is a screenshot from the Fintel website, this one for AMC. As you can see, institutions bought loads and loads of AMC through 2021 and 2022. But then, of course, because of the reverse split, institutions were then holding less shares because they were split adjusted. But now institutions are still buying and buying more AMC shares and are now holding more than ever. And the exact same thing is being seen with GameStop as well. Of course, institutions were buying GameStop back in 2020, not during 2021 during the sneeze, but again through 2022, 2023, 2024, and now into 2025. Again, institutions are also holding all-time highs in terms of their share count for GameStop. I personally think these institutions are getting ready for something big for both AMC and GameStop. Now guys, many of you, like me, love AMC and GameStop, but many of you also love other alternative investments like gold, silver and crypto. Crypto is in a massive bull market right now, with Bitcoin hitting new all-time highs and even Ethereum hitting new highs as well, near its all-time highs. So let me tell you about the sponsor of today's video, DeFi Technologies, ticker symbol DEFT. This video is disseminated on behalf of DeFi Technologies, and it's a top crypto idea that's just recently graduated to the NASDAQ. Two huge investors, Tom Lee of Fundstrat and Eric Jackson of EMJ Capital, have already spoken about DeFi Technologies on the 19th of November 2024. Back then, the company hadn't even graduated to the NASDAQ yet, and the stock was trading for around $2.28, compared with today where it trades around $3.25. Now, this company and its stock have been outperforming Bitcoin for years. Just check out these returns. 1 year Bitcoin returns up 76% compared to DeFi Technologies up 122%. Over 2 years, Bitcoin is up 238%, DEFT 3,474%, and the 3 and 4 year returns are equally as incredible. So how does DeFi Technologies achieve it? Well, the company's subsidiary, Vala, creates and issues ETPs, exchange-traded products, for the cryptocurrency sector. As this image shows, at the end of May 2025, Vala had $800 million of assets under management, and it monetizes that sum in a way other asset managers can only dream of. DeFi Technologies Vala offers over 75 exchange-traded products covering the full spectrum of the crypto market, allowing individuals and institutions that aren't allowed to hold crypto directly the ability to have crypto exposure through ETPs. Another department under Vala engages in staking and lending, and this helps to generate approximately 8% returns on assets under management that are staked or on loan. On top of that, Trump is all in on crypto and blockchain. The Trump administration has taken significant steps to reshape US cryptocurrency policy, and DeFi Technologies management has taken notice and made an acquisition recently that gives it US exposure while it continues on its global expansion plans. DeFi Technologies is one of only 3 profitable public crypto companies. The company has bought back 2.5 million shares in the last year alone, and the founder of DEFT, Oliver Rousey Newton, who owns 17.9 million shares, hasn't sold a single share. So guys, as always, be sure to do your own research on DeFi Technologies, ticker symbol DEFT, trading on the NASDAQ. Something I also found very interesting was this tweet from Reese's Politics about the IWM ETF. So Reese's Politics tweeted saying, "I cannot believe what I've just read." He said there was more than $2 billion worth of IWM fails on July 21st, a single day. He said specifically that was 11 million shares of IWM for $2.4 billion in one day. To me, not only is that absolutely crazy, but it goes to show that synthetic shorting is so much bigger than just AMC and GameStop. Don't forget, IWM isn't just one single stock, it's a collection of the Russell 2000 stocks. The IWM is so far one of the only major ETFs, when you think about the S&P 500 and the NASDAQ, that hasn't hit new all-time highs. Of course, both the S&P 500 and the NASDAQ have been hitting new highs multiple times this year, but the IWM is still below their 2021 highs. It shows the short sellers are doing absolutely everything they can to suppress the price of small cap stocks. So guys, be sure to let me know what you think down in the comments below. Which hedge fund do you think is going to be the next to collapse? If you haven't already, guys, be sure to subscribe to the channel and hit that notification bell, because that way you'll be alerted when I upload a new video. Cheers.